Hey, what's up guys, John here. Did you know the average American family makes $500 per month less than they did in 2019?
When adjusted for inflation, wages have remained virtually unchanged over the last 50 years, with workers today earning just 12 cents more than they did in 1972.
Yet, prices of everything essentially doubled. Home prices, car prices, food prices, everything is out of control. When you start to pull back the curtain and look clearly as to what's really going on in America, you'll see this shocking story. 8.9% of the entire US population with a credit card is behind on their bills. In top cities, the top 100 metros in America, 30%, well 29.6% to be specific, are behind on their credit card bills. You start to look at everything that's happening, you'll see very, very, very clearly that America was told you deserve more. And it's a great story to say. You deserve more. You should be paid more. You should be taken care of more. That's one thing to say it. It's another thing to do it. When people say this, a lot of people will love to listen to it and say, you know what, I do deserve more. Everything is more expensive. I work really hard. I should get more.
Workers are demanding better pay and more staffing.
Service workers will rally at Sky Harbor Airport demanding better wages.
For public services workers are demanding better wages.
Meanwhile, they're hitting not the employee alone, they're hitting the employer as well, making the person sending that message more powerful and dominant than ever before. And that's exactly what is unfolding right now in the US economy. I'm going to show you what this is going to look like over the next couple months because things are getting out of control in America. Please hit the like button, YouTube will share this content, educate more people about what's going on in our economy. If you'd like to fix your credit to position yourself for what I believe is going to be the greatest wealth transfer in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free call for tomorrow. Take a look at this. So, and this is, I went and searched real median household income. That's it. And clicked it. What did they say? The average income, American family, was $78,250. Now, they are saying that the average is about $74,500. So about $5,000, give or take. About $400, $500 a month in reduced wages. Yet, inflation is now, this is as of last year. So this is almost a year-old information, 8-month-old information. And they were saying Americans need an extra $11,400 just to afford. So if you add in the $4,000 or $5,000 plus this $11,400, what you're going to see is an erosion of Americans' living standard. And I'm not telling you something you don't know, but what I am going to tell you is what is going to happen next, what's already happening. This great wealth transfer, it is shocking. Look at this. So 65% of middle-class Americans are struggling financially, according to a recent study. Regardless of income levels, almost 60% of polled people claim they're going through financial hardship. Even more concerning is that they do not anticipate their financial condition will change for the rest of their lives. Meanwhile, 33% of people surveyed face extreme stress about their debt, and 33% of respondents are concerned about saving for the future, and 32% are concerned about paying for unexpected expenses. America was a land of the free, the home of the brave. People would come here and work very, very hard, provide their kids a great life, provide themselves and their wife and husbands a great life. Everyone would come to America to contribute and work really, really hard. Well, when you have such a large percentage of people saying, you know what, no matter how hard I work, this financial situation is never going to get better. What does that say for America? What does it say for where we've come? Nearly 80% of Americans right now consider fast food a luxury. Imagine eating a Big Mac as a luxury, or eating Del Taco as a luxury. This is the world that we're walking into and that we're in right now. Now, back then, in 2007, right before the great financial crisis, everyone looks at this year, 2007, 2008, as this major Titanic-like event where it was just the end of the entire economy. In reality, things were good back then. The average home price at the peak was $246,000. In many markets, that would drop 20, 30, 40%. Well, now, according to Forbes magazine, May 7th, they're saying the average home price is $495,000. So get this, real wages drop by $5,000 a year, inflation picks up by $11,400 a year, and home prices double. Property taxes are based on this new value, doubling. Property insurance out of control, and maintenance and repairs on properties getting out of control. You start to look at all this, how is anyone going to be able to afford this? They claim that U.S. home prices increased 47% in the last 4 years. 47% in the last 4 years. So like two-bed income hasn't increased 47% since 2020. No, in fact, it's reduced. So you look at this, back in 2007, 2008, you could buy a used car for $7,900, $8,000 ballpark. You could buy a new car for $23,000. You can't buy a nice used car today for, $15,000, $20,000. And back then, this is a new car. Today, a new car is $48,000. That's what the new car is. So a new car has essentially doubled in price since then. So it just goes to show how far we're going. Auto prices are falling. But owning a car is more expensive than ever. And what they say here is they say that the cost of new and used cars may have fallen from the highs of 2021, but surging insurance premiums and rising financing rates are still making it far more expensive to own a car. They predict in the next 5 years, 80% of Americans will not own a car. And instead, they will do ride sharing. And they'll have, public transport as their primary option for getting around, electric scooters. That's going to be how people are going to be getting around in the next 5 years. 80% of the U.S. population. And Business Insider, every mainstream article is talking about this. And they were talking about this in 2016, 2017, making this prediction. Back then, that sounded crazy. Now, a lot of people can probably wrap their head around that idea as being a reality. When your car insurance, in Philadelphia, for example, is almost $400 a month for the average premium, it's $4,800 a year, almost $5,000 a year. You have an average car payment on a new car, $750 a month, $730. Even a used car is $530 a month. The insurance cost today is what a used car payment was back in 2007, back in 2008. It's nuts. Food inflation is so bad that a $100 grocery list in 2019 cost $137. This is what they're reporting. Even the Fed, they're coming out saying the same thing, that they're saying that here that things have rose 25%. This is from the USDA. USDA is saying from 2019 to 2023, all consumer price index rose by 25%. 25%. This is coming from the USDA, right? So this is pretty crazy. What percentage of Americans are behind our credit card bill? 8.9%. And then 30%, 29.6% of Americans in the top 100 largest metros were behind on their debt payments between July and September of 2023. Now, remember what happened in November? November, student loans became due. So you can just imagine how much more people are in financial hardship today than they were 6-7 months ago, right? We're walking into what I believe is going to be a situation, a scenario where insurance is going to push millions of people out of their homes and cars. A lot of people are going to have to make very difficult decisions due to what's going on right now with insurance. In Florida, they're claiming that Florida property owners pay an average of $10,966 for homeowners insurance. Now, some are saying, no, that number is $8,500. Look, in 2019, the average premium in Florida was under $2,000. So whether it's $8,000 or $9,000 or $7,000, it's insane what has happened to insurance. It is insane what has happened to America. And I don't think there's going to be any other alternative. I think more Americans are going to accumulate more debt to survive. They're going to feed themselves or feeding their creditor. They're going to start seeing more and more delinquencies and defaults across the board. I think we're going to see car prices fall in a very, very, very big way. I think we're going to see a lot of people making difficult decisions with their homes. If you think about this, 60% cheaper to rent than it is to own. That's now. Imagine what that number will be next year. We're at a 50-year high in apartment construction. You have a lot of retirees sitting on homes that they don't want to sell because they don't know how far their dollar will last, so they want to rent them out. You're going to see a lot of people, they don't have the ability to sell their properties. They're underwater on these properties. What are they going to do? They're going to try to rent them out and try to hold on. We're going to see it becoming a lot more cost effective to become a renter than it will be to become an owner. And during this period, I believe we're going to see Wall Street, a lot of private equity investors, a lot of real estate funds stepping forward, seeing this as the greatest opportunity to acquire single family and residential multifamily properties all throughout America. Even Fannie Mae and Freddie Mac, they're working on a 5% down payment program, 5% down for a 2 to 4 unit property. Meaning $400,000, you come with $20,000 down. A lot of people could probably put that together. And 20 grand down, you can move into one unit, you can collect rents on the adjacent units and potentially reduce your living costs. You know, if you're in a low property tax area with low insurance, with favorable landlord-tenant laws, and you really check the boxes and do your homework in your area, it could be a good solution for a lot of people that are looking to play the defense here. But we're going to see a lot of people getting completely blindsided by all of this. I see video after video all across Twitter about people in Canada, in Australia, in America, talking about losing their homes, talking about their husbands getting a second job, trying to make ends meet. This is the new America. What do you think about this entire situation? Let's have a conversation about this below. I think 2025 is going to get crazy. I thought 2020 was pretty interesting, pretty crazy, but gradually, every year is just getting a little bit weirder, a little bit harder, a little bit stranger. I think 2025, 2026 is going to continue to get much, much, much worse. So the goal is to get in the top 5%. Get in the top 5%, you're going to have a lot of options, reducing living costs right now, reducing any expenses you possibly can that are holding you back. It's probably something to consider. I think if you have cash, you have credit, you have stable income, you're going to be in a much better position than you wouldn't otherwise. Because you look at 2007, 2008, what happened during that period? Banks got scared. That's what happened. And the only people that got loans were people that were, viewed as low risk. So just put yourself in a position to where if you were a bank, you'd want to lend you money. And if you have a situation where tens of millions of people are in financial despair and you can get access to liquidity, I think life will be a lot easier. Let's have a conversation below. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Catch you next video.